Are we on the brink of an economic slowdown? This question looms large as we delve into the insights of economic analyst Stephanie Pomboy, who paints a rather stark picture of the current US economic landscape. Stephanie Pomboy articulates that the Federal Reserve's rapid interest rate hikes could spell trouble. These increases, intended to stabilize inflation, may instead lead to severe consequences for both the economy and the financial sector. As borrowing costs soar, both consumers and corporations find themselves grappling with debt service that is fast becoming unaffordable. This shift could significantly dampen economic activity. Turning our gaze towards consumer behavior, we observe a troubling trend. Current consumer spending appears robust on the surface, yet it is largely supported by dwindling savings and escalating credit card debt. This is not a sustainable financial strategy. Indicators such as declining restaurant sales, faltering consumer confidence, and a pessimistic outlook on the labor market suggest that consumers are nearing their financial limits. On the corporate front, while headline figures suggest strong profits, this strength is not broadly distributed. The reality is that these profits are concentrated among a handful of large corporations. Most small to mid-sized firms are struggling. They face the double whammy of higher interest rates and rising input costs, which they cannot fully pass on to consumers. The Federal Reserve might find itself backed into a corner, needing to resume quantitative easing to bolster the Treasury market, especially as foreign buyers retreat due to the perceived weaponization of the US dollar. The banking sector is not immune to these pressures. As unrealized losses mount and deposit outflows accelerate, banks may be forced into selling depreciated securities, further destabilizing the financial landscape. In this environment, Pomboy recommends a cautious approach to investment. She advocates for holding assets like cash, gold, and long-dated treasuries. Conversely, she advises steering clear of corporate credit and consumer debt instruments, which are likely to be hit hardest by economic weakness and the Federal Reserve's limited room to maneuver on lowering rates amidst persistent inflation. In summary, the economic outlook, as analyzed by Stephanie Pomboy, suggests significant headwinds. The rapid tightening by the Federal Reserve, unsustainable consumer and corporate finances, and potential strains in the Treasury market could collectively force the economy into a precarious position. For those navigating these turbulent waters, caution remains a guiding principle.